All right, back to work. Back to work. Break time is over. What happened this afternoon? Man, markets ripping higher, squeezing higher. These big moves like this, they can be a bit tricky at first, but I'll tell you, anytime I see a short squeeze, like we saw this afternoon, there are three types of trades I always look for the following day. I'll give you a hint here. Number 2 and number 3, three easy trades. The second and third trade, though, are my favorite. They have potential to make a big profit tomorrow. I'm going to cover all three of my favorite trades. We'll definitely cover number 2 and number 3 in a lot of detail. I want to make sure you guys have a roadmap to make some money tomorrow after this beautiful short squeeze we saw here this afternoon. Before we jump in, though, and to my favorite squeeze trade game plan for tomorrow, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you enjoy these videos, if you like these lessons, hit that like button for me, will you? Give me a shout out, give me a hell yeah down in the comment section below. Thank you so much for tuning in, supporting our channel. Hope the dads, by the way, had a great Father's Day this weekend. Boy, that weekend just flew right by. That's all right, we're back to work. A busy week ahead of us here today. Boy, charts are all ready to go here. Beautiful charts, I should add. NASDAQ, triple Qs are all ready. The E-mini and the SPY is ready. This after rollover to 924 contract here on the S&P and the NASDAQ. I have three important clues right now that are telling us where the winning trades, the money is made tomorrow morning. One of those important clues is right here on this 60-minute, these hourly time frames. We're very bullish overall. You can easily see that on the S&P and SPY. We're bullish overall on the NASDAQ and the triple Qs. I like to use these 60-minute charts to give us the best overall directional bias for our trades tomorrow morning. But I'll tell you right now, these hourly charts, they're great for direction, but they're not going to give us entry timing. To find the entry timing tactics, we have to drill down to some faster time frames, some tick charts. I have two more important clues here on the tick charts. Before we dive into the faster time frames, though, I want to talk about entry tactics, those three trades I'm looking for tomorrow. Let's check our schedule because we do have some big news coming tomorrow morning. We got retail sales number coming out at 8:30 Eastern time. That is definitely one of the biggest news events of the week this week. Third week of the month. Quad witching is on Friday. Day off, of course, on Wednesday for Juneteenth. But tomorrow morning, though, retail sales. Don't be sleeping in tomorrow morning. That retail sales number, we'll see if the consumers are as strong as the last couple of retail sales numbers have shown us, though. That's definitely something I'm watching for tomorrow. And, of course, we'll come back later on in the week. We'll talk about Juneteenth. We'll talk about jobless claims, PMI numbers, quad witching. Going to be a busy week ahead of us, so don't go anywhere. Back to our charts, though, because it's good to know when the retail sales number comes out tomorrow. But we all know by now, right, the money is made on these charts. I mentioned earlier, they got one big clue, three total clues right now. One clue is this overall bullishness on the 60-minute time frame on the S&P SPY. You probably don't need me to tell you that. The most important thing, though, is now let's drill down to some tick charts here, and let's talk entry timing. This, by the way, is a 7,000 tick chart. Again, where the 924 contract rollover day was today. Again, all time frames, upper left-hand corner. And if you're watching for the first time right now, welcome to the channel. This is the 21 EMA. It's pretty much the only indicator we use to find lots of winning trades each week in our trade room at 8 o'clock Eastern time. I mentioned there are two more important clues right now on these tick charts. Of course, tick charts make pattern recognition a whole lot easier. One big clue is, speaking of big, is that big move. Now, anytime we see a big move like this, we don't want to buy high, we want to buy low. And to do that, we look for a two-legged pullback, buy nice and low, and a retest of the high. So second big clue tonight is the size of that move. I don't want to buy high, I want to buy nice and low. And to do that, a two-legged pullback. We'll talk more about that here in just a moment. Now, the third clue, one of the most important clues on the chart right now, is a range breakout. Anytime we have a range breakout, we had that beautiful, again, that bull flag we talked about. What a great trade that was right on Friday into Friday afternoon. But that range, of course, right, we've now broken out of that range. And I'll tell you, it's not an if, it's a when we pull back into that breakout pullback zone. That breakout pullback zone, what was resistance now becomes support. And that will try to drag this market down. I would imagine a lot of buyers would love to buy the dip around that breakout pullback zone, 55.19, 55.10 there underneath us. So we know we're bullish overall on the 60. That's one clue. Get a big move. Don't buy too high. That's our second clue. And third clue is that breakout pullback zone. If you put this all together right now, I think it's pretty easy to see. There are 3 different types of trades I'm looking for. I mentioned earlier, the first one's very easy, the most common, the first one. The second and third trades, though, are really where, in my experience, the big money is made after a short squeeze. So first things first is a 2-legged pullback. When I say 2-legged pullback, think about a measured move. You know, I teach measured moves inside our free trading class, right? Think about a measured move. Now, measured moves are 100% extensions. I want to go a bit more, okay, a bit more than a 100% asymmetrical measured move. That will give me the general area of where I think the best entries are going to be on this. Now, I'm not going to pick a bottom on this. If there's one thing you learn from me, we're not trying to pick tops and bottoms. What I'll do is, once I get that 2-legged pullback, now let's get the pullback to the moving average. Because when I was a rookie trader, I would have thought that deep pullback was a reversal. On a fast time frame, this will look very convincing as a reversal. When I was a rookie, I would think this is a reversal, but it's not. It's a deep pullback because, again, it's a big move going higher. Now, let's trap those rookies into this pullback once, twice. Get those rookies to chase after this. Don't pick the bottom. Get those bears coming in, trap them in, and we're going to use their stops to fuel that move going back up to retest the high. In the free video course, I call this a failure pattern, right? Failure patterns, a 2-try failure after a 2-legged pullback. Now, my favorite trade after a failure pattern runs those stops is to look for what's called a bear trap pattern. Now, bear trap patterns are very simple, but you gotta learn them. First thing about a bear trap pattern is it will separate away from the moving average, okay? That's the first thing. It will separate away from that 21 EMA. Then it's a higher high in price, very important, and it move right below that low. There'll be a nice strong green candle, right? The signal, the entry on the trap. This is a trap pattern. We teach this, of course, inside the free video course, right? So again, think about that 2-legged pullback, a bit more than a measured move. That will allow us now to buy nice and low. But again, we're not going to make that rookie mistake and pick the bottom on this because, you know, I don't know. It might go all the way back down here. I don't know how far that pullback will go. What I do know, though, is once those rookie bears commit, now they're trapped. We can squeeze their stops, run their stops, and then grab that, again, in this case, a bear trap, separate off the moving average, a higher high in price, and a move right below that prior low. Nice strong green candle, target off, back up to retest the high. This is one of the easiest, most consistent way I know to make money after a big short squeeze in an overall bull market. But it's only one of the 3 trades I'm watching for tomorrow. Let's now kick this up a couple more notches, because again, this is the easy one here, but it's not always the most lucrative. For example, one of my favorites on this is we oftentimes will get a 2-legged pullback. We'll get those bears trapped in. We'll get a nice easy failure. And as we pop up, what will happen is the bears will come in and try to shoot this thing back down and retest that low. Again, it's a winning trade, right? It's a winner off that low. We take our 1-to-1, but now again, because we're so high up, oftentimes there'll be some bears up there. They'll whack this thing back down again and run back down to retest the high. Now, sometimes these are 2-legged moves as well, right? Oftentimes they're 2-legged moves, a bit more than a measured move as well. But the goal is to go back and retest that low. Now, think about this. When I was a new trader, I would have thought for sure this is a reversal, but it's not. We're an overall bull market. We're way high up. This is a gift from the trading gods. These double bottom retests, ask any student of mine, they'll tell you, we hope we get these double bottom retests every time we get a big short squeeze higher. Now on this one, it's the same basic idea, right? I'm not gonna pick the bottom here because it may keep going, right? But once it does wind up pulling back now, trap those bears in, 2 tries. Why 2 tries? Because I want their stops, right? If you get stopped out as a short seller, right, you have to buy your way out. That's what causes these big short squeezes, right? That big bull flag we had last week. The bears are getting out, and that squeezes those bears higher. It's the same idea here. Trap those bears in once, twice with a failure pattern. And again, the market wants to go back up and retest that high. As it makes that run going higher, don't chase after this sucker. Look for that separation off the moving average, that higher high in price. Again, a bear trap, a trap pattern off of that low. And again, these are a gift from the trading gods, that double bottom failure in a trap combination. I know a lot of you guys love these patterns as much as we do in our trade room, but let's slow down for a second. We've covered a lot so far, 2 out of 3 favorite trades for tomorrow. I know most of you folks watching right now, you know these patterns. You're making money on failures, traps, double tops, double bottoms. But if you're watching for the first time right now, I get it. This might be a brand new language for you, but don't you worry. I teach all these entry patterns. I have hundreds of examples of failures, traps, and a hell of a lot more. I cover all the details in our free video classes. I'll put a link up top or for you, upper right-hand corner. Grab that link that popped up there, hit that link, and take that free trading course, because I'll tell you, the strategy you're going to learn in that short video series will teach you a stupidly simple trick we use in our members trade room, so we always know where the best winning trades are setting up each day. More importantly though, I want to help you start making money on your own. I want to teach you 4 my favorite entry patterns: traps, failures, strength trades, pullback combos. Guys, you're going to learn all of it in that free video course. Guys, the markets are so good right now. If you're not making consistent money every day, if you're missing the best trades, if you're struggling to qualify for a funded account at Apex or Top Step, hit the link up top there. Take that free course. It's perfect for someone who wants to make the jump into full-time trading, give you an easy roadmap to follow every morning at the opening bell. Also be aware too, I'm gonna put all the important links tonight, the description of the YouTube video, my free class links, be down there for you. We trade together every day in our trade room. I'll put trade room membership links down there for you as well. And also too, I post a lot of videos and charts and mindset stuff on Twitter or X throughout the day. If you're on Twitter, X, give me a follow. All my details, all the links in the description of the video. But make sure first though, start off with that free video course, because it'll give you an easy roadmap so you always know where to find the winning trades every day. So at this point right now, we've covered 2 out of my 3 favorite trades here for tomorrow. I want to get that number 3rd trade in the NASDAQ in a moment. Before we do that, though, we're going to talk about number 3, which is really kind of, I think, the easiest way to make a ton of money tomorrow morning after a short squeeze. Before we talk about the 3rd one, the biggest, most lucrative one for tomorrow, let's talk about some variations of this, because we talked about a couple pretty easy setups, right? The 2-legged pullback, the retest, double bottom retest there. Those are pretty easy. Let's talk about some variations, then we'll talk about the number 3 pattern later on in the video. I mentioned earlier, I want to get that 2-legged pullback down and then trap in some bears, 1, 2, and use their stops to fuel that move going higher, right? That's kind of the easiest way I know to make money. Trap the bears in, overall bull market, snap back up to retest the high. But you know what? Sometimes we don't get that entry down here. Sometimes we get a sharp correction, but there's so many buyers down here around that breakout pullback zone. Sometimes we don't get the entry and the market just whoop and runs right back up to retest the high. These can be very, very frustrating because again, we don't get the entry we want down here. Now, usually what happens on these is it'll pop back up and begin to grind going higher. Okay, look for that grind. The hardest part about that grind is you do not want to chase after it going higher. What we want to do is draw a trend line off that high. Now pin that trend line down around that low. That creates a new channel. Now, very important, look left and find some of these prior swings. My goal is whenever I see a V bottom off that low, I don't chase after it because again, buyers are going to want to buy low, right? So you don't want to buy high, you want to buy low. And to do that, my favorite entry is a bear trap. Like I'm showing you here, get below a prior swing. Oftentimes this goes below the 21 EMA. That's where failure patterns live. Get above the 21 EMA. That's where pullback combinations live. That's where That's where bear trap patterns live on the way back up again. Again, if you're here for the first time right now, this will be a new language for you, but take that free video course. This will make a lot more sense. We have a lot of examples of these V bottoms into that first test, right? We always say that, right? The first test is the best test off the low of that channel. These are really, really good trades here. Again, not the ideal. I'd like to be buying down here, right? But again, the bottom line is if it V bottoms off that low, remember the key is the grinder, right? That's always the giveaway. Mark that trend line. Find that channel, wait patiently, let the mark come to you. Bear trap, failure, bear trap, pullback combination. A lot of examples of those inside the free video course. That is one variation that, although we don't, we hope we get the two-legged pullback. That's one we're watching for here right now. Also, two, let's talk about one more. I want to get that deep two-legged pullback, right? But sometimes we don't get that deep two-legged pullback. Sometimes all we get is a shallow pullback. Now, shallow pullback would be we don't quite get a full two-legged pullback. It's just kind of a shallow pullback. Now, what's the problem with a shallow pullback? The problem is we're not accomplishing our goal. We're not buying nice and low. So if all I get is a shallow pullback, this is where those bear trap entries are going to be critical to buy as low as we can. What do I mean by that? Well, I mentioned earlier, if I see a two-legged pullback, I'm going to buy relatively low here, right? Comparatively speaking, I'm going to use what's called a failure pattern, right? A failure pattern is one variation of a bear trap, right? We trap the bears in, and in this scenario, in a deep two-legged pullback, my risk is here, my reward is right there, okay? Guys, those are the trades we love because we can risk 10 to make 30, right? Do that consistently, and you're on the right track in your trading. But if we get a shallow pullback though, shallow pullbacks, now think about this, right? If we pull back now, if all we see is a shallow pullback, we pull back now 1, 2. If I buy right here again now, okay, now think about my risk is right here, my reward is right there. Does that look attractive to you? Please say no. Please say no, because that's not a very attractive risk reward ratio. I like that it might be balanced, but the goal is a lopsided risk reward ratio, right? Makes sense? Okay, so we can fix this problem by looking for a bear trap entry. A bear trap entry is right below this low, right? Again, same idea, bears once, bears twice, but now I want to get in underneath the low of that first try low. Now risk is here, reward is right there. See how much better that risk reward is? These are trades professionals are waiting for. These are trades that are 85, 90% winning percentages. These are trades, risk small, earn large. You can build a very, very lucrative career on, not the trade, right? Not the trade like this, like that, right? So if we see a shallow pullback, we got to have traps, right? Got to have traps. It's the same idea as if we go V bottom right off of that low and start chopping around up here, right? I don't want to buy up here. My risk is there. My reward is right there, right? I want to get in and buy low down here, right? Off of that channel, right? Off of that channel back up again, because now my risk is kept here. My reward is kept right there, right? Keep looking for those low risk, high reward trades. And we talk a lot more about this, of course, in the free video series. So make sure you grab that as well. So those are some variations of those first two trades we talked about here on the S&P. But I've said the best for last, one of the easiest ways to make a bunch of money tomorrow after a big short squeeze like this. Let's cover that third trade here for tomorrow over the NASDAQ. NASDAQ gets a bit angry if I go too long without talking about the NASDAQ here. So NASDAQ, I'm with you, buddy, here now. NASDAQ is bullish overall. You don't need me to tell you that. It's pretty obvious. Over here now on the tick charts, you'll notice here right away, this is a 4,000 tick chart, slight different time frame than we saw in the S&P. The S&P is a lot more volume overall than the NASDAQ. And of course, as always, the 21 EMA is right there in front of you there as well. I mentioned earlier, right? Same thing applies here on the NASDAQ. We have a really, really big move going higher. Anytime we see a big short squeeze like this, we want to look for that deep pullback, right? That two-legged pullback and buy back up to retest the high. That is one clue we have on the tick charts. The next clue, of course, is that big range down there. And again, anytime we see a range breakout like this, it's not an if, it's a when. That breakout pullback area will be a magnet trying to drag this price down. And you can imagine a whole lot of buyers would love to buy that deep pullback down around that breakout pullback area. Just like we talked about on the S&P, the exact same game plan, right? Look for that two-legged pullback, a bit more than a measured move. Don't pick that bottom, right? Don't pick the tops and bottoms. Trap those bears in with failures. Failures then will squeeze higher, right? As those bears get run over, we then get that separation off the moving average, higher high in price, right below that low for that bear trap back up to retest the high. Again, we call it a failure in a trap combination. Again, traps are necessary when you're getting in late on that move because it keeps your risk reward ratio in balance, right? Good. Now, again, if we see that two-legged pullback, we might get that failure. We may snap back up and retest that low. Again, these are oftentimes the most lucrative versions of this because now anybody who sells right here, they're taking their profit down here. This is a horrible spot to be selling because you're so bullish overall right now. This is a gift from the trading gods. It's not a reversal. Let them try once, try twice, same thing once again. That failure into that, you guessed it, that bear trap combo, rinse and repeat. If it V bottoms, right, boing off that low, it's nothing more than a pop up, a grinder going higher, mark that high, mark that low. And as always, don't miss that first test is the best test off the low of that channel. It could be a trap, could be a failure, could be a pullback combo, any of the entries you guys are learning inside the free video course. And you can in the NASDAQ, right, you see very obviously here, that move up, that channel there, great spot there for a shallow pullback. But again, what's the problem with shallow pullbacks? The problem is we're not buying low. To buy nice and low, we have to get those bears trying twice and buy underneath that low. That way our risk reward ratio, right, is this, like that. It's not like this and like that, right? Make sure you're not buying high on a shallow pullback. And I'll tell you, oftentimes what happens is we get those shallow pullbacks, they retest that high, and then everybody takes their profit, and that's the time we get that deeper two-legged pullback, right? Trap those bears in, 1, 2, and squeeze back up again. A shallow pullback bear trap first, a deeper pullback again to trap in more bears, but allow the buyers to buy nice and low now, failure, trap combination. So a lot of the same stuff we talked about there on the S&P. Now, let's talk about ranges, right? Because ranges are very common after a big move in one direction. Sometimes the market's so darn bullish overall that nobody dares take profit, nobody dares to sell it. And of course, nobody wants to buy high up here. So of course, the market oftentimes will tread water. There is a range forming right now on the chart in front of us. This may not be the full range we see the rest of the week for tomorrow. But the most important thing you want to think about when it comes to ranges is that ranges act like magnets and they like to rotate. So the amount below the range, amount above the range. We know that ranges act like magnets and they like to rotate back and forth, right? That makes sense, right? Okay, so think about now, find areas. This is the key is once you find your trading range, you want to find levels of support, right? Swing lows, trend lines, pendulum swings. Again, we'll learn more about that stuff inside the free video course. I want to get into support levels underneath that trading range, and I want to look for that same failure. And of course, I wouldn't complain at all about a bear trap combination. A failure pattern is all you need though. A failure into a trap combo. 1 try, 2 try. Again, we're not going to pick the bottom on this, right? For all I know, it'll really drop, right? But if we see this range, if that range continues to develop overnight here, that range is a magnet. The amount below the range projects now above the range. That's where the market wants to go right now. And what I'll do is use that failure into that trap combination, exactly what we talked about earlier on the S&P. The difference though is if we see this market now turn into a trading range, if we start seeing more evidence of a range here, that range becomes a magnet now to be a little more aggressive on my entries. Failure, trap pattern. Now, here's where things get really good. And this is why these are oftentimes the most lucrative way to make money, is because now the amount below the range projects now above the range, takes some profit off at the high, right, of day, right? That big 271 and a quarter, the big high. Leave a runner though for that pendulum swing, because again, they do like to rotate off that low. Failure, bear trap, rotation back higher. Where things get more interesting there is if we were to make a run higher, again, mark up the amount below, the amount above. Once we get up around that pendulum swing now we're way high up. I like to look for what's called a crown reversal pattern. That's buyers trying once, lower low, buyers trying twice. It's basically a bull trap pattern and a failure pattern combined off the high. I like to look for these crown reversal patterns there, right? Again, it is a one try for the buyers, two try for the buyers, a move right above that high, right? Crown reversal patterns like that for a short off that high. And then of course what I'll do is I'll measure the amount above the range, bring that down below. That will give us the target on that short. But more importantly though, once we take out that pendulum swing now this is a beautiful spot to be a buyer. The hard part of course is a lot of momentum, right, coming off of that high as it rotates off that high. I'm not going to pick that bottom, right? Do not make that rookie mistake. What we'll do is, the bears come in, you got it. One try, two try, same idea, right? Don't pick the bottom, trap those bears in, squeeze those stops with a failure pattern as we make our way higher. Where does the market want to go in a range? The market wants to rotate back and forth, right? Back and forth. So we know now where the market wants to go. It wants to go back and take out that high. As it does that, as it rotates here, we now look for that separation off the moving average, higher high in price, move right below that low. These are oftentimes one of the easiest trades to make money with because everybody knows where the market wants to go. We've got momentum now on our side. That bear trap pattern, take some profit off at the high, and always leave that runner. So don't be surprised here. Don't be surprised if we do rotate higher overnight, right? And of course, get that bull trap, right? Not a good spot to be buying pullbacks, right? Not a good spot to buy pullbacks. Trap the buyers in. You're buying too high up after a big move higher like this. Trap those buyers in. Get that bull trap pattern, that crown reversal pattern off the high. I always go on these types of trades half size on those because they're so against overall direction. So half size, quarter size. Again, leave that runner, measure above, measure below. That's your target. And that's also where you look for that failure into trap pattern combination as we go higher here. If for some reason, by the way, this thing squeezes off of this low, right? If this rotates and just rips and runs higher, we then are basically the same game plan, right? Now that high becomes the breakout pullback area, right? So now we go in, there's that two-legged pullback once again, right? So really same example here, two tries for the failure into that bear trap combination. Remember, oftentimes it will retest, do it again. So if we do end up rotating and squeezing here once again, that's my range. Think about that two-legged pullback, that breakout pullback and retest of the high. The same game we mentioned earlier on the S&P and the NASDAQ can be applied literally the exact same way if we do end up squeezing and running higher here overnight as well. All right, guys, that's the game plan now for tomorrow. Now, don't forget, tomorrow morning, 8 o'clock Eastern time, the best way to start making money out there each day is come out and learn it and trade it with us every morning in our trade room. We open up every morning, 8 o'clock Eastern time. I'm going to put all the important links tonight, the description of the YouTube video. Start first on the free video course, learn the setups, learn the roadmap, start making money out there on your own. Don't forget too, any questions, any trouble getting access, use live chat, call the office. I'm always here if you guys need help along the way. All right, guys, hope you learned a bunch tonight. Hope you use this knowledge to make a bunch tomorrow. And hopefully I'll see you sometime soon. Trade with me every morning in the morning room at 8 o'clock each time. In the meantime, be well, be nice to each other out there, will ya? And be here next time. Adios, amigos. Bye for now.